Ever wondered which is the best index to invest in? Dow Jones, S&P 500, or Nasdaq? Each of these are key players in the world of investing, boasting unique characteristics that may cater to different types of investors. The Dow Jones, a collection of 30 industry-leading companies, the S&P 500, a broad snapshot of the US markets, and the Nasdaq, a tech-heavy index. In the next few minutes, we'll explore the pros and cons of investing in each of these indexes. First on the list is the Dow Jones Industrial Average, one of the oldest and most watched indexes. This heavyweight of the financial world has a reputation for stability, which can be an enticing factor for investors seeking a safer bet. Tracking 30 of the largest publicly owned companies in the US, the Dow Jones is a reliable barometer of the industrial sector's health. But with pros come cons. The Dow Jones' focus on large industrial companies means it offers limited exposure to the broader market. It's like getting a glimpse through a keyhole, rather than a panoramic view. Its selectivity, featuring only 30 companies, could be a drawback for those who prefer a diversified investment portfolio. Moreover, the Dow Jones uses price-weighted methodology, which means companies with higher stock prices have a larger impact on the index's value. This could skew the index's representation of the overall market. While the Dow Jones offers stability, it may not be the best choice for those looking for diverse exposure. Next up is the S&P 500, a broad representation of the US stock market. This index is composed of 500 of the largest companies listed on the New York Stock Exchange and the Nasdaq. One of its key advantages is diversity. With sectors ranging from technology to healthcare, the S&P 500 provides a wide array of investment opportunities, reducing the risk of putting all your eggs in one basket. However, this doesn't mean it's devoid of risk. Like any equity investment, the S&P 500 can be subject to volatility. Market fluctuations can impact the value of your investment, and while the index has historically shown growth over the long term, there are no guarantees. It's also important to note that while the S&P 500 does offer broad exposure, it's heavily weighted towards the largest companies. So, the performance of these giants can significantly sway the index. The S&P 500 provides a broad exposure, making it a popular choice among many investors. Last but not least, let's delve into the Nasdaq Composite, known for its focus on technology. A significant pro of the Nasdaq is its heavy tech orientation. This makes it a fertile ground for investors looking to capitalize on the digital age, as it houses some of the world's leading tech giants. The potential for high growth here is considerable, with many of these tech companies experiencing exponential growth in recent years. However, it's not all rosy in the tech world. The Nasdaq's tech-heavy nature also contributes to its cons. Its volatility is a major concern, with tech stocks known for their wild price swings. The risks associated with tech-focused investments are also noteworthy. These include the fast pace of technological change, which can quickly render a company's products obsolete, and the high competition in this sector, which can lead to fierce price wars. The Nasdaq offers potential for high growth, but with that comes increased risk. So, which index is the best to invest in? Well, it's not a one-size-fits-all answer. Dow Jones, with its blue-chip stability, might be your choice if you prefer safety. S&P 500, a broader representation of the market, could be your pick for diversity. Or, you might lean towards Nasdaq, if you're game for high-risk, high-return tech stocks. But remember, it's all about your investment objectives and risk tolerance. The key to successful investing is diversification and understanding your tolerance to risk. Invest wisely. You may not know that YouTube channels depend on the total accumulated time their videos are watched. Channels also highly depend upon the number of subscriptions received, so thank you for watching the entire video. To further help this channel, please click the subscription button below. In addition, if you enjoyed the video, you may also click the thumbs up button. Thank you.